Supermicro's Q4 gross margin just came in at 17.6%, more than double its own guidance range. And its FY 2027 revenue guide of $65 to $72 billion topped every published forecast on Wall Street. I'm Lena. The US market closed 3 hours ago, and here's what actually moved after the bell. Tonight it's heavy earnings, a geopolitical shocker, an ETF megadeal, and one bold take-private rumor. Start with Supermicro. Fourth quarter non-GAAP gross margin surged to 17.6% against its own guide of 8.2% to 8.4%. For a server maker, that isn't a beat, that's a rewrite of the entire margin structure in one quarter. Non-GAAP earnings per share hit $1.70, blowing past the 96-cents analyst consensus by 77%. Revenue of $11.12 billion grew 93% year-over-year, enormous growth on any comp. But it still missed the $11.56 billion estimate by 3.8%, and management pointed to supply chain delays. Under the hood, enterprise customers overtook OEM hyperscalers to represent 50% of quarterly revenue for the first time. That mix shift is why margins jumped. Enterprise deals price at higher unit economics than hyperscaler contracts. The FY 2027 outlook of $65 to $72 billion sits above every published street forecast. That's the number to remember. Next, RTX is turning Europe's rearmament cycle into reported margin, not just press release orders. Second quarter operating profit rose 31% to $2,811 million. Sales climbed 14.5% to $24,708 million. GAAP operating margin expanded to 11.4% from 9.9% a year earlier, 150 basis points of leverage. Total backlog grew to $289 billion from $268 billion at year-end, a $21 billion swing in 6 months. That means cash is finally converting, not just signatures piling up on paper, a key distinction for defense investors. Now the geopolitical shock. China's NDRC ordered Meta in April to unwind its $2 billion acquisition of AI agent startup Manus. This is the first time Beijing has applied its foreign investment security review rules to an AI transaction. Those rules were enacted in December 2020 and took effect January 2021, dormant until this ruling. The deal had already begun operational integration, which makes an unwind far more disruptive than an early-stage block. The precedent matters. Every US-listed AI acquirer eyeing a China-linked target now has to price this risk in. Expect deal counsel to add explicit NDRC review clauses to every cross-border AI term sheet going forward. Goldman Sachs agreed to acquire ETF provider NEOS Investments for up to $2.25 billion in cash and equity. The full price is subject to performance milestones, so not all $2.25 billion is guaranteed at close. NEOS manages $30 billion across 19 options-based income ETFs. It pulled in roughly $14 billion in net new flows in 2026 alone. That's the growth Goldman is buying. The deal lifts Goldman's active ETF assets to a pro forma $80 billion, making it the 8th largest active provider. 3 quick hits after the bell. Chipotle's automated Guac signal flagged jalapeños on July 20, 2 weeks before the FDA identified the source on August 5. The internal system worked, but CMG shares are still down 15% from their post-Q2 high. The Financial Times reported Trian is preparing a second take-private bid for Wendy's, this time with 2 co-investors lined up. Teledyne agreed to buy Varex Imaging at $18.90 per share, a 52.3% premium worth about $1.1 billion including net debt. Devon Energy's Q2 revenue jumped 73% to $7.42 billion after its all-stock merger with Coterra closed on May 7. Simon Properties real estate FFO per share rose 7.9% to $3.29, and management raised full-year guidance. Exelon revenue rose 8.8%, but first-half diluted EPS slipped to $1.28 from $1.29, growth without earnings leverage. What to watch at tomorrow's open? Supermicro's tape has 2 forces pulling, the margin surprise versus the revenue miss.
And Wendy's after the Trian report, a formal take-private offer could reset the multiple in a single headline.
For the full breakdown of every story tonight, head to LineVestnews.com and subscribe to LineVest Daily for tomorrow's brief before the open.